All right, ladies and gentlemen, good morning. Welcome back to another trade recap. As we can see, beautiful position here on NQ from this new week opening gap. Made about 7,400 on this trade for a nice 5R. Was going to hold for about like a 6R or a 5.5R, but it was giving me a lot of chop through here, so I decided to close manually. And this is one of those scenarios, ladies and gentlemen, where you do regret not holding it longer. But TradingView was fucking with my partials. They weren't letting me take off partials this morning for some reason, so I was able to just make do with that scenario. But nonetheless, I'm not going to be a greedy bastard about it. We're not going to chase trades. We're not going to FOMO out like an amateur. We're just going to go ahead and recap the beautiful 5R that we did smack this morning. Going to fast forward here till 9:30. This is where the session actually opened, and I did end up showing up slightly later than usual. I have a few things going on this week, so I've been getting to the markets around like 10 a.m., 10:15 a.m., give or take. But when 9:30 opened, this is what you were looking at. So we actually had a pretty perfect opportunity to do a bottom tick entry going into NYSE open. You can see that we were respecting those 4-hour fair value gaps on the bullish side. We also had a bullish 15-minute gap here. And then keep in mind, we also had that new week opening gap above as a draw on liquidity. Overall, going into NYSE open, we mainly had buy bias. And then under here, you could also use this order block as a potential limit order for your bottom tick entries. Keep in mind, if you trade my IFVG model or if you trade 2022, any other ICT model, you can also use all these levels. You don't have to turtle soup them. You can simply wait for confirmation. But if you want the best risk to reward, if you want to get those, quote unquote, top and bottom tick entries, then you're going to have to use the turtle soup method. And then we also had premium and discount. This is in a discount, and so is this. So these two levels check out in terms of being a point of interest. So what you can look for in this scenario is price to either come here or come there, and then after that to simply price higher. And in terms of London low and London high, we were sweeping London high up here, but we still had a higher time frame draw. And then London low was way somewhere over here too. London really just consolidated. So in that case, I'm not going to really refer to those levels too much going into NYSE open. So let's see what happens here. Like I said, this was not when I was on the charts yet. I arrived at the charts somewhere around 10:15-ish. Beautiful play right there. You could have taken an entry on that 15-minute fair value gap with the current narrative. Now, let's fast forward a little bit more to when I was getting on the charts. This is like when I was arriving at the charts. So I took a look at this and I was like, okay, we already delivered from down here earlier in the day, so we're probably not going down here. This could be a potential place we retrace to, but I'm not really counting on it right in the immediate now, simply because our new week opening gap is right above. Rather than retrace right now, I was thinking we could probably run up into here, and what I'm looking for is for price to run up into here to top out and close a candle respecting this level, and then I'm looking for the next candle to be the retracement candle. In other words, I want to see that open up, sweep the high of the previous candle, and then deliver down. So I'll show you what I mean by this right now. So you can see we get price coming up here into the new week opening gap, and it doesn't slow down. So initially I was thinking of top ticking the bottom of the new week opening gap because it looked like a solid level, but after we ran straight through, I kind of abandoned that trade idea. Now you can see next we form a candle with a rejection wick at the top, and it's also looking like we're going to start retracing, possibly trade into this fair value gap here, this fair value gap. So we have these two draws on liquidity in terms of going bearish. So we already traded into the new week opening gap. So if we don't want to go up and reach for consequent encroachment of that gap, then what we can do is retrace. So I was thinking we will probably more so retrace based on how far price has already ran and just how much price is slowing down right here. What I do in this scenario, we'll move this out of the way. And then I take the high of the candle or the doji candle or rejection candle. It's better when this is like a full like rejection doji candle, but this is good enough. It shows me that price is losing momentum. And so I'm going to place a limit order on the high of that candle And what I want to see is us sweep this high and then start to trade into the 15-minute fair value gaps. So sweep this, and then we start retracing to both of these. And in this context, we actually have a very, very big premium. So this is a beautiful area for us to go ahead and retrace to a discount. So I'm thinking we could at least retrace to there if we do a full retracement. If we simply just wick and go, then we'll probably only touch the upper quarter or the consequent encroachment of this one. And in the worst case scenario, we'll simply wick the under level of this and continue up if we're extremely bullish. But let's go ahead and drop down to the lower time frame to see what happened here. So you can see that price is chopping around right above that high, and then we come up, and then eventually we do sweep that high. So that's actually where we got filled on our limit order right there. That was that 15-minute high that we had drawn out. So boom, we are in the trade now. We could see how far it goes. Initially, I was targeting the consequent encroachment, but you'll see that it gets a little choppy here. So it's chopping around, does another pass through. And at this point, I'm thinking we could be using these lows to just stay in a range. So in that case, I don't want to see us sweep relative equal lows, then immediately price up for consequent encroachment. So I decided to be a little bit careful. So I still left my limit order here, but I was willing to do a manual close if I saw price getting a little slow. And this candle right before the exact candle that tags me out of the trade was obviously looking a little iffy. So I ended up closing somewhere around here. It was about a 4.85 R is what I was bagging on this. And then immediately after that, a couple seconds after, it does reach for final target. And then beyond that, you can see it reaches for, pretty much even further, pretty much that discount that we were talking about. And then let's see where it's at now. So even further. So it did retrace to about a 75% discount at this point, and we're back at the original fair value gap we were during NYSE Open. So beautiful, beautiful execution. Definitely wish I would have held longer, but that was more of a technical difficulties issue of not being able to close than a, real skill issue. So I'm not too mad about it. But if you would have taken that just to that midpoint, that was a 21R. Massive, massive price action. I don't know what everybody's talking about in terms of January price. If you're not crushing it in January right now, I don't know what you're doing. You got to start using the top and bottom ticking model. So go ahead and head over to that tutorial and you're going to learn exactly how I trade every single morning. And if you want to tap in with me closer, you've seen the wins I've been posting all over my Instagram of all the students that I'm helping inside the one-on-one group. So if you want to be a part of that as well and start actually taking your trading seriously, then fill out the application below, click the link in the description, and we'll be in touch. Other than that, safe trading for the rest of the week. I'm likely closing out my week after these two bangers. Take care, everybody. Be blessed, and I will see you guys in the next one.